On Tuesday, the 7th of May, Malaysian stocks, the market cap, hit a new historic high of 2 trillion ringgit. Meanwhile, the FBMKLCI soared past 1,600 points, currently standing about 1,606 points. And so far, since the start of the year, it has racked up over 10% in gains. If we compare the FBM KLCI against the largest stock market in the world, which is the US, the S&P 500, we are pretty much on par with the S&P. You can see that the gains are pretty much similar. And in fact, the FBM KLCI, the benchmark index, beat US growth stocks such as Tesla and Apple. Now, the exceptional performance over here is due to several reasons. Strong support from the local funds as well as foreign investors returning to the market, and foreign investors gradually transitioning into emerging markets such as Malaysia. And analysts, they are a bit conservative. They predicted a 5% increase for the FBM KLCI over the next 12 months. But so far, just 5 months in, we have already more than doubled the majority of analysts' predictions. So it's really good news. And if you look at the heavyweight counters over here, Maybank since the start of the year is up almost 11%. If we factor in dividends, it's up almost 14%. CIMB Group up 16.51% with dividends almost 20%, currently at a 6-year high, if I'm not mistaken. Tenaga Nasional, this is one of the best performing heavyweight counters, up almost 27%. Currently at a 4-year high. Now, even if you don't directly invest in Maybank, CIMB, or Tenaga Nasional, or any equities in Malaysia in particular, this is still great news for you because EPF, they have about 140.5 billion allocated in the FBM KLCI. And that's roughly about 14% of its 1.003 trillion total assets under management. Now in 2023, the total assets under management increased to 1.136 trillion. So we do expect a similar increase in terms of local equities as well, occupying about 14 to maybe 16% of EPF's total assets under management. EPF's notable shareholdings over here, or should I say EPF's top shareholdings, 4 of them belong to banking stocks. So you can really see what is EPF's investment strategy. Maybank 24.4%, RHB, CIMB, and Public Bank, and the final one being Tenaga Nasional. These top 5 stocks have a total value of 61.17 billion. So at the end of the day, if you're a new investor and you're telling yourself, how do I start investing in the Malaysian market? Well, you can look at big institutions, in particular EPF, what is their investment strategy? And it's pretty clear, they mainly invest in banking stocks. Now, apart from the finance industry, EPF also has exposure in the majority of sectors in Malaysia. This is the list of the most significant shareholdings of EPF. First one being MBSB, they hold about 66% of MBSB. Next one is RHB, 41.02%. MRCB, they own about 36.21%. Globetronics Technology, 18.08%, so on and so forth. So this is not only the investments of EPF. Obviously, EPF does have a lot of different types of investments spread across multiple sectors in Malaysia. And to pile on to the good news, EPF is not the only fund that heavily invests in Malaysian markets. ASB, currently their fund size as of December 2023 is 174.91 billion, and majority of the funds goes to the equity market, 83.13%. And the majority of this belongs to the Malaysian stock market. ASB's single largest shareholding is in Maybank, equivalent to about 21% of the 174.91 billion. They hold a lot of Maybank shares. And next one, which is over 2 times lesser, is CIMB Plantation Berhad, 9.09%, and CIMB 3.89%, Tenaga Nasional 3.76%, so on and so forth. Speaking of Maybank, ASB is the single largest shareholder of Maybank. They have a 30.17% stake, holding 3.64 billion shares. They even beat EPF. EPF only has about 1.29 billion shares, or a 10.73% stake. In fact, if you look at Maybank's top 10 shareholders, 5 of it belong to ASNB fixed price unit trust funds. The first one being ASB, and next one is ASM, then you have ASM2, ASM3, and finally ASB2. Which is why I say the rally in the Malaysian market right now is good news for everyone, even though you don't directly invest in these stocks. Okay, as long as you have exposure in EPF, which I'm assuming the majority of you are working right now, okay, and if you do dabble a bit into ASB or ASM, then we do expect slightly higher dividend for these funds in 2024. I've decided to ask this similar question to financial experts as well, in particular Mr. Sani Hamid, he's an economist. He says it's still a bit too early to tell. Even if the year ended with great gains, he doesn't think that it will translate into much higher dividends. Slightly higher, yes, but not far off from last year's dividends, because ASB and EPF, they will want to manage expectations and also keep some of the gains aside for rainy days. So yeah, let's just keep our hopes up, and hopefully EPF can touch the 6% dividend mark this year, similar to ASB as well. Let's move on over to another topic, which is about EPF Account 3. Now, for those of you guys who are unfamiliar, if you open up your EPF account right now, you will see that Account 3 is already live. And you will have this one-time option until the 31st of August to transfer part of your funds from Account 2 to Account 3 as an initial amount. Now, I already tried it. It's expected to be completed within the next 7 business days or so. And a lot of people on Twitter right now are discussing, saying that it's a no-brainer to use your EPF Account 3 to invest in PRS, because of the tax reliefs. Now, on surface-wise, this may seem like a good deal, because if your tax bracket is slightly higher, then you'll get those juicy tax reliefs, and then PRS also gives you steady returns every year. But there are a few things that you got to consider before going with this move, or if you are planning to withdraw the 10% and invest in somewhere else, you got to understand that the risk-free rate is now 5.27 to 5.63%. And that's EPF's Sharia and conventional returns in the past 6 years. And EPF itself, the returns are actually quite impressive. It beat the majority of unit trust funds in Malaysia, including ASB, ASM, AHB, and Tabung Haji. So if you're planning to withdraw the 10% and invest in something else, in fixed deposits, it definitely doesn't make any sense. But if you plan to invest in an asset that gives you 6 to 7% returns every year, but carries much higher risk, then it doesn't really make sense. You might as well just leave it into EPF. But what about investing in PRS for the tax reliefs? Well, it only works if your tax bracket is high. I'll give you an example. Let's say you're currently earning about 2,300 ringgit a month, which is equivalent to 27,600 a year. Just by filling in the tax form, you'll be eligible for the individual relief, which is 9,000 ringgit, and you'll fall into category B, which is the 1% tax rate. Now, in this case, if you contribute to PRS for the tax relief, you're only saving 30 ringgit. And at the end of the day, if your tax bracket is slightly higher, let's say 8% or 10%, so you just multiply this by 8. At the end of the day, you only save about 240 to 300 ringgit. So that's the first thing you got to consider. And another thing that you got to consider about PRS is that they have a lot of fees. Unlike EPF, which has no sales charge or management fee, what you see is what you get. PRS funds, some of them do charge sales fees. Then there is a pre-retirement withdrawal tax. Then there's a transfer fee. There's an annual PPA fee. There's an annual management fee. There's an annual trustee fee. All of this will eventually eat into your profits. And PRS funds, if you select those low risk and moderate income funds, right? Their returns are very bad. Very few of them can outperform inflation. For example, this fund over here, since inception, it's 18.6%, right? But if you do the math, the yearly returns is only 1.91%, which doesn't even cover for inflation. Okay, so these are the few things that you got to take note of. If you want to, allocate it into PRS for those tax reliefs, you got to make sure that the returns after fees is much higher, or at least equal to EPF's 6-year average returns of 5.27 to 5.63%. Now, another example over here. Let's say your tax bracket is much higher, like I said just now, 8%. Right? In this case, you contribute to PRS, you save 240 ringgit. Even with starting with a much higher initial capital, right? if the fund you chose has a mediocre performance, let's say 3 to 4% every year, over 25 years, if you just keep it in EPF with a slightly lower initial capital, you will have 79% more returns. Okay, so make sure if you guys are looking at PRS right now or looking to invest elsewhere, yeah, do think twice before you want to withdraw that 10%. And if you still want to invest in PRS, well, Hanley over here, he's the founder of Ringgit Plus. He says that just aim for those growth funds. Okay, don't put it into conservative, moderate balance, or even income funds, because the majority of these PRS funds, they don't keep track of inflation, they don't perform, mainly due to their extremely high fees. Okay, so yeah, hopefully this gives you a bit of insight on the current rally in the Malaysian market, as well as withdrawing your EPF money to invest elsewhere. When applying for PRS, does it make us have another obligation to contribute a fixed amount monthly or yearly, or can we stop anytime? Yeah, this one you can stop anytime. PRS is not like a fixed contribution, it's a one-time contribution only. And whenever you feel like it, you can contribute more. It's just that every year they give you some amount of tax reliefs lah. Okay, so let's say like 3,000 ringgit every year, then if you contribute like 3,000 ringgit every year, you'll be eligible for those tax reliefs lah. Okay. On another note, what's your opinion about the current construction sector in Malaysia? Their stock surged quite a lot year to date. Do you think they are already trading at fair value? Okay, now about this question, right, I don't think I'm qualified to answer this because I don't have any research done in the construction sector in Malaysia. But I do have a bit of exposure in terms of construction or property sectors. I just buy REITs. Okay, those REITs you can look it up on Google, right? Sunway REIT, yeah, Pavilion REIT, all of these REITs will give you exposure to the construction sector without worrying too much about the volatility itself. But when it comes to other sectors such as banks, I'm quite confident that banks will continue to perform for the rest of the year because banks, they are considered as cyclical stocks, and they tend to perform well when the Malaysian economy makes a comeback. So yeah, if Malaysian economy performs well this year, then we do expect the Malaysian banking sector to perform well as well. Okay, and we're already seeing it, right? Can you go a bit deeper on the calculation of tax reliefs? Sure. Okay, now taxes in Malaysia is what we call progressive. It's not like if you earn, let's say 35,000 a year, you won't be taxed 3% on the entire amount. Rather, on the first 20,000, you will be taxed 1% on the provided the first 5,000 is not taxed at all. So you can see it's really a stage by stage progressive tax. Yeah, your tax will increase slowly as your income increases. It's not like if your income falls here, then you'll be taxed this amount. It's not the case. The first 5,000, no matter whether your income is 120,000 ringgit a year or 12,000 ringgit a year, the first 5,000 is not taxed. Then followed by the next 15,000 is taxed 1%, then the next 15,000 is taxed 3%. Yeah, you get the pattern over here. That's the calculation for your taxes over here. Now, when it comes to tax reliefs, right? So the first thing that you do is you get your monthly income or your annual salary lah. Okay, you get a whole figure, something like 27,600 or probably 30,000, right? Then you deduct your tax reliefs. Yeah, your tax reliefs is whenever you fill your tax forms, yeah, they will give you like some conditions. If you buy some badminton racket this year or shuttlecocks, or you play some basketball, all of this can be claimed under the tax reliefs, which at the end of the day will reduce your total income. Yeah, so rather than 27,600 a year, with this individual relief itself, it's actually 27,600 minus 9,000. So that's equal to about, if my math is correct, sorry, math is quite hard during a live session. I'm just going to put 19,006, whatever, okay? You get the idea over here. It falls below the 20,000 ringgit mark. Then you take a look at the current tax bracket. This is how much you'll be taxed, yeah, considering the progressive tax system. EPF voluntary contribution, do we have the option to put our fund towards flexible account only, or will it be auto-allocated? So now when it comes to voluntary contributions for EPF, right, they will hold the 75, 15, and 10 ratio. So no, you cannot choose a specific account to contribute. If you decide to add 1,000 ringgit voluntarily to EPF this year, 750 will go to account 1, which you cannot withdraw until you are 55. 150 will go to account 2. Now this one can only be withdrawn for specific purposes such as education, housing loan, as well as your medical bills. And the remaining 10%, which is 100 ringgit, this one goes to account flexible or account 3. It can be withdrawn anytime without any conditions. Okay, so when it comes to account 3 itself, right, there are no conditions for withdrawal. You do not need to submit any supporting documents as well. Yeah, the funds will arrive in your specified bank account within 7 business days. Shout out to all our gatherer members, our supporters. Really, none of this would be possible without your support. Andrew, Wendy, Edward, Alex, Sissy, Irshad, Caveman, Balls, Calvin, Tommy, Jinkang, Adrian, Jazz, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, and Jindan, as well as all of our learner members. Alright, I will see you guys next Sunday, 10 p.m. Stay safe, guys. Good night.